Bitcoin had a really good day yesterday. The price broke through 38K and it was looking like we wanted to test that 40K resistance level. Things were looking bullish. But the question that should be on people's minds and needs answered is, are we out of the bearish woods? Is the next run going to happen? We'll find out in about 10 minutes because it's time for chicocrypto. Now, I'm sure many of you have forgotten about the bear markets we have faced already throughout this Bitcoin cycle. Yeah, we have had more than a few bearish goes of it since the Bitcoin halving, which took place in May of 2020. During late summer 2020, some call it the DeFi bubble, we crashed from nearly 12,000 down to the low 10K levels in early September. We didn't recover until late October, a short 2-month bear market. January 8th of 2021, we hit a peak of over 40,000 for the first time. Although after we crashed and crashed hard, back down to 30K. This was a short 1-month bear market. From late February to early April, 2 times it looked like the bear was going to take over, but the downward pressure only lasted a week or 2 at max, and we went on to make higher highs. You can't call those bear markets or cycles. But by mid-April, the price collapsed with a dead cat bounce and then collapsed some more, and we went into a full-on bear market. This was a brutal one where the price retraced by over 50%, where the bottom wasn't hit until July 20th. This was about a 3-month bear cycle. In September, we had another short 1-month bear. Early September, we crossed 50K again, and then by the end of September, we crashed back down to 40K. This amount the price fell by just over 10K, and the length of this cycle was very similar to the one that happened in January. Just over 10K fall for both of them, and the length was about a month. After the January bear, we had the push to above 60K, and then the bear market, which lasted 3 months. Now after the September bear, we pushed above 60K once again, which leads us into the bear market we are facing today. My question is this bear cycle similar to another one we have already faced throughout the year, like the one in July? Well, yes, it is. It is very similar. For this bear cycle, the price reached a daily close peak of about $67,000 on November 8th. The daily close bottom was about $33,000, which was hit on January 24th. From the high to the low, this is a collapse of nearly 51%. The July bear cycle, the price reached a daily close peak of $63,000 on April 15th. The daily close bottom was hit on July 20th, which was about 30K. This was a collapse of 52%. Those percentage falls have been extremely similar. What about the time it takes to get to the bottom? Well, July cycle top to bottom was from April 15th to July 20th. This was just over 3 months, to be exact 97 days. The peak for this bear cycle was November 8th. If 33K was the bottom, that happened on January 24th. That would be a top to bottom cycle of just over 2.5 months, to be exact 78 days. So the percentage decrease for each of these bear cycles is very close, very similar, within 1% of each other. And the days it takes to get to the bottom is pretty close too, within just over half a month of each other, or 19 days. But what if things are going to happen exactly like last time in terms of days from top to bottom? Well, if that is to happen, then this bear cycle wouldn't be over until February 12th. On that day, it would be 97 days from the November 8th top. So, do we deflate back down to 33K or even back to 30K by February 12th? I don't know about that, although the similarities between this bear cycle and the July one don't stop at time and price. There are so many others, and I'm not the only one thinking it. Zhu Su, co-founder of 3AC, tweeted yesterday, "Confluence with July 2021. Number 1, NFT bull market. Number 2, FTX powerful private round. Number 3, mini alts dead. Number 4, BTC and ETH hold round number support. Number 5, TradFi funds panicked out. Number 6, on-chain accumulation re-emerging." So let's just dive into his reasons, breaking and analyzing my favorite ones, beginning with an NFT bull market. Yes, indeed, this month we are having an NFT bull market. Monthly trading volume for NFTs has reached an all-time high, while the broader crypto market is having a slump. The block covered it and showed NFT trading volume reached over 6 billion for the month of January. Now back in July of last year, this was also similar. NFT sales for the month hit a record high, while the crypto market was slumping earlier in the month. Are NFTs becoming a leading signal of crypto bull markets? If we do take off and go into another bull, I sure as hell am going to be paying a lot more attention to their data and analytics. Now what about Su's second confluent sign? Well, he said a powerful private round for FTX. Well, FTX yesterday announced that they had raised $400 million more in a Series C funding round, which had raised their valuation to a whopping $32 billion. Well, back in July, a similar batch of news hit the airwaves. July 20th, which marked that bear cycle's bottom, news came out that FTX had raised $900 million in a Series B funding round, putting it at an $18 billion valuation. Now, this current valuation and funding round of FTX is big. Some of the largest institutional investors in the world participated, and the valuation now puts FTX valued higher than Nasdaq, Credit Suisse, Deutsche Bank, the CBOE, and even Robinhood. Is this a sign of what's to come in crypto? Crypto is the next wave of finance, and this bull market is far from over, or is FTX just seriously overvalued? Now moving on to sign number 3 from Su. Many alts are dead. And this one's pretty obvious, especially if you're an alt holder. All you have to do is look at your crypto portfolio. Most altcoins are down bad from their November highs, between 60 with some over 90%. Well, the same thing happened in the July cycle, and we all know what happened when that was over. Many of those alts reached new all-time highs. Now reason number 4, BTC and ETH holding a round number support. Well, a round number is just a number that ends with one or more zeros. But yeah, Bitcoin held a round number of 30,000 in the July fall. And yes, Bitcoin held a round number of 33,000 in this fall. Ethereum held a round number of 1,800 in the July fall and held a round number of 2,500 in this fall. Although that isn't a big confluence reason to me. Su's reason number 5 is TradFi funds panicking out of the markets. Now, unfortunately, there isn't much data out there to confirm this, but I'm sure it's just what Su has seen as a rich whale. But if it is true and big funds panicked out of the markets just like July, they will be back again, just like after July. And to the final confluence sign from Mr. Zhu, that on-chain accumulation is once again re-emerging. Will Clemente, he tweeted about it last week. He tweeted some fairly heavy whale buying over the last week. Very interesting. And he showed a chart that whale holding entities, those with over 1,000 BTC, the green line, have had a series of spikes in accumulation for BTC. And if you look back to late July, a similar thing happened, which signaled the end of that bear cycle. But it's not only whales. Bitcoin is in demand as a whole, from the small fry to the whale. Another on-chain analyst, Willy Woo, tweeted, "I guess BTC is in demand lately," and showed as of late there has been major outflows of Bitcoin from the centralized exchanges. As we can see in late July, early August, there was also a major outflow of Bitcoin that began. Although there is one more signal screaming that we may be through the worst of it all, and brighter days are coming. Will tweeted this: Bitcoin is currently the 4th most oversold in its history according to dormancy flow. Dollar cost averaging more heavily into this area is probably the best approach for the long-term investor. As we can see from the chart, this dormancy flow indicator also dropped into the buy region in July of last year. But also March of 2020, bear market bottom of 2018, the bear market bottom of 2015, and even all the way back in late 2011. On-chain analytics are screaming buy. The bear dip is so similar to the July one. So what to do? Well, this isn't financial advice, but I agree with Will. DCA, dollar cost average, it's the best strategy. You never know what Bitcoin is going to do, but if you DCA, you buy the ups and you buy the downs. Cheers, viewers. I'll see you next time.